I almost made the most expensive mistake of my life in a Miami high-rise. 18 months ago, I was standing in a two-bedroom condo in Brickell, watching the realtor explain why $1.2 million was actually a bargain. Ocean views, marble countertops, building amenities, international demand, all the buzzwords. The numbers made sense on paper. Strong rental demand, appreciating market, tax benefits. I was ready to wire the earnest money that afternoon. Then I went back to my hotel room and ran the actual cash flow projections. After mortgage, property taxes, HOA fees, insurance, and management costs, I would be losing $600 every single month, not making money, losing it. My entire investment thesis depended on appreciation bailing me out over 5 to 7 years. I called my accountant. He laughed. Not a polite chuckle, an actual laugh. "You're buying a lottery ticket," he said. "An expensive lottery ticket with monthly carrying costs. In Miami, you're not investing anymore. You're speculating." He was right. And that phone call sent me on a journey that completely changed how I think about real estate investing. 6 months later, I owned 3 rental properties in a Florida city most people can't pronounce correctly. Combined purchase price, $470,000. Less than half what that Miami condo would have cost. Combined monthly cash flow, $4,200 positive. Not projected, not hoped for, actual cash hitting my account every month. Let me tell you about Gainesville, Florida, and let me tell you why I think it's the best real estate opportunity in America right now. Before I explain why Gainesville, you need to understand what's happened to Miami, because if you're thinking about Florida real estate, you're probably thinking about Miami first. Miami has become a victim of its own success. The median home price in Miami-Dade County crossed $700,000 last year. That's not for oceanfront mansions, that's the median. Half of all homes cost more than that. A two-bedroom condo in a decent Brickell building runs over $1 million. A single-family home in a neighborhood where you'd actually want to live, $1.5 million minimum. And that's before you factor in property taxes that can hit $20,000 annually, insurance costs that have tripled in 5 years, and HOA fees that would qualify as rent payments in most American cities. I spent 3 months analyzing Miami rental properties. I looked at over 200 listings. I ran cash flow projections on every single one. How many would have been cash flow positive with 20% down? 7 out of 200. And those 7 were all in neighborhoods with serious crime concerns, deferred maintenance issues, or other red flags that explained the lower prices. The math simply doesn't work anymore. Miami rental yields have compressed to the point where you're essentially paying for the privilege of being a landlord. You're betting everything on appreciation, and you're competing against international buyers who don't care about cash flow because they're parking wealth, not investing it. I talked to a property manager in Coral Gables who's been in the business for 30 years. He told me something that stuck with me. Miami stopped being an investment market around 2019, he said. Now it's a wealth storage market. Different game entirely. If you're trying to build wealth through real estate, you need to look elsewhere. If you're trying to preserve wealth you already have, Miami works fine. But most people coming to me can't tell the difference. I couldn't afford to confuse wealth storage with wealth building, so I started looking elsewhere. I didn't find Gainesville through some brilliant analysis or secret insider connection. I found it because I was complaining at a real estate meetup in Orlando. I'd been venting about Miami's impossible numbers to anyone who would listen. Most people nodded sympathetically and shared their own Miami frustrations. But one guy, a quiet investor named Roberto, who I later learned owns over 40 rental properties, said something that changed my trajectory. "Why are you trying to make Miami work? That game is over. The game now is finding the next Miami before it becomes Miami." I asked him where he was investing. "Gainesville," he said. "Have been for 6 years. Best decision I ever made." I thought he was joking. Gainesville? The college town? The place people drive through on the way to somewhere else? He smiled, like he'd heard this reaction before. Come visit my properties, he said. I'll show you the numbers. Then tell me if you still think I'm crazy. 2 weeks later, I drove to Gainesville. What I found there changed everything. I'm going to be honest about my first impression of Gainesville because I think it matters. Driving into the city on Interstate 75, I wasn't impressed. Strip malls, chain restaurants, traffic that felt surprisingly congested for a city this size. It looked like any mid-sized American city, which is to say, it looked kind of boring. But Roberto had told me to reserve judgment until I saw specific neighborhoods, so I kept driving. He met me in an area called Hale Plantation, about 15 minutes southwest of downtown, and this is where my assumptions started breaking down. The neighborhood looked like it belonged in a much more expensive city. Tree-lined streets, well-maintained homes, families walking dogs, kids riding bikes. The kind of suburban prosperity that costs a fortune in most Florida markets. Guess what a 4-bedroom house here costs? Roberto said. I estimated, based on what similar neighborhoods cost in Orlando or Tampa, 550, 600,000, 325, he said. Maybe 350 for the nicer ones. I didn't believe him until he pulled up the listings on his phone. He was right. Beautiful single-family homes with actual yards, modern kitchens, good schools, and safe streets for $300,000. Less than half what comparable properties cost in Orlando, a third of what they'd cost in Tampa, and maybe a fifth of what they'd cost anywhere near Miami. Okay, I said, prices are low, but why? What's wrong with this market? Roberto grinned. That's the right question, and the answer is nothing's wrong. The market just hasn't been discovered yet. Let me tell you what I learned about Gainesville's economy, because this is where the investment thesis gets compelling. Yes, the University of Florida dominates this city, and yes, that made me nervous at first. A college town economy seemed fragile. What happens if enrollment drops? What happens if state funding gets cut? But the more I researched, the more I realized I had the wrong mental model for what UF actually is. The University of Florida isn't some regional college with uncertain prospects. It's one of the top 5 public universities in America, over 56,000 students, a research budget exceeding $900 million annually, an endowment over $2 billion, economic impact on the region estimated at over $15 billion per year. This isn't a school that's going to suddenly disappear or dramatically shrink. This is an institution that's been growing for decades and has explicit plans to keep growing. The state of Florida has made UF a strategic priority, pumping money into expansion, faculty recruitment, and research facilities. But here's what really changed my thinking. The university is increasingly focused on areas that create economic spillover: biotechnology, artificial intelligence, medical research, engineering. These programs don't just educate students who leave after graduation. They create companies, attract talent, and generate high-paying jobs that stay in Gainesville. I toured the Innovation District, a research and development hub adjacent to campus. Companies ranging from startups to major corporations have facilities there, biotech firms, tech companies, healthcare innovators. The people working in these buildings aren't students. They're professionals earning 6-figure salaries who need places to live. UF Health Shands, the university's medical center, employs over 13,000 people by itself. It's one of the largest hospitals in the Southeast and a major regional referral center. These are stable, well-paying jobs that don't disappear during recessions. The economy isn't just the university anymore. The university has spawned an ecosystem. Roberto showed me his portfolio spreadsheet. 42 properties acquired over 6 years. Average purchase price, $183,000. Current average value, $261,000. That's 43% appreciation, which is solid but not extraordinary. What was extraordinary was the cash flow column. His properties averaged $870 per month in positive cash flow after all expenses: mortgage, taxes, insurance, management, maintenance reserves, vacancy allowance, all of it accounted for. Still positive. $870 per unit per month. I asked to see the detailed breakdown on a few properties. He showed me everything. A three-bedroom house near the hospital, purchased for $192,000 in 2021. Current rent $1,850 per month. Mortgage payment $940. Taxes and insurance $420. Management $185. Maintenance reserve $150. Vacancy allowance $92. Net monthly cash flow $63. Wait, that's not $870. Let me explain. Roberto bought most of his properties between 2018 and 2022 when prices were significantly lower. His older properties have much lower mortgage payments, which is where the strong cash flow comes from. The property I just described was one of his most recent purchases, bought near the top of his price range. This is important because it tells you something about where we are in the cycle. The easy money has been made, Roberto told me. 5 years ago, everything cash flowed from day one with 20% down. Now you have to be more selective, but the opportunity is still here if you know what to look for. He was being honest with me about the challenges. I appreciated that more than I would have appreciated unrealistic promises. 3 weeks after that visit, I bought my first Gainesville rental property. It was a 3-bedroom, 2-bathroom house in a neighborhood called Northwest Gainesville, built in 2004, 1,400 square feet. Nice, but not fancy. The kind of house that would rent to a young professional couple or a small family. Purchase price, $224,000. I put 25% down because I wanted stronger cash flow from the start. My mortgage payment came to $987. Taxes and insurance added another $360. Property management at 10% of rent added $170. Maintenance reserves and vacancy allowance added another $220. Total monthly cost, $1,737. I listed it for rent at $1,900 per month, slightly below market rate to ensure quick occupancy. It rented in 4 days. 4 days. The tenants were a couple in their early 30s. She worked as a nurse at UF Health. He worked remotely for a tech company in Atlanta. They'd moved from Jacksonville specifically for her job and were looking for a long-term rental while they decided whether to buy in the area. Exactly the tenant profile I was hoping for. Professional income, stable employment, long-term horizon. My net monthly cash flow, after all expenses, $163. Not life-changing, but positive from day one. In a market with 40% less entry cost than comparable Florida cities and genuine appreciation potential, I bought my second property 2 months later, then my third. The cash flow compounds, the equity builds, the strategy works. After 18 months of active investing in Gainesville, talking to dozens of local investors, property managers, and real estate professionals, I've learned some things that don't show up in the typical market analysis. First, the rental market is segmented in ways that matter enormously. Student housing near campus is a different beast entirely. High turnover, property damage risk, seasonal vacancy, parents who co-sign leases and then fight you on security deposits. Some investors do very well in this segment, but it requires specific expertise and tolerance for headaches. Professional rentals away from the immediate campus area are much more stable. The tenants are older, their incomes are verified through actual employment rather than parental guarantees, and they treat the property better because they're building careers and lives, not just passing through. I focus exclusively on the professional rental segment. My properties are in neighborhoods where the typical tenant is a hospital worker, a university staff member, a graduate student with a research stipend, or a remote worker who chose Gainesville for affordability. Second, property management quality varies wildly. There are excellent property managers in Gainesville who understand investor needs, maintain properties proactively, and communicate professionally. There are also terrible property managers who will cost you thousands in unnecessary repairs, lost rent, and legal headaches. I interviewed 7 property management companies before choosing one. The one I chose manages Roberto's portfolio too. They charge 12% of rent, which is higher than some competitors, but they earn it through lower vacancy rates and better tenant screening. Third, location within Gainesville matters more than most investors realize. The areas closest to the university have the highest rents, but also the most competition and the most tenant problems. The areas furthest out have the lowest prices, but also weaker rental demand and longer vacancies. The sweet spot is the middle ring, neighborhoods close enough to major employers for convenient commuting, but far enough from campus to attract professionals rather than undergraduates. Northwest Gainesville, the Halo Plantation area, and parts of Southwest Gainesville fit this profile. Fourth, new construction is not your friend as an investor. Builders are active in Gainesville, which is generally a good sign for market health. But the new construction is mostly priced at levels that don't work for rental math. Builders are targeting owner occupants who will pay premium prices for new finishes and warranties. The best investment properties are typically 10 to 20 years old enough to have depreciated from new construction premiums, new enough to not require major system replacements, and usually located in established neighborhoods with proven rental demand. I promised myself when I started making content that I would be honest about risks, not just hype the upside. So let me tell you what keeps me up at night about my Gainesville investments. University dependency is real, despite the diversification I mentioned earlier. If something dramatic happened to the University of Florida, enrollment collapse, major funding cuts, scandal that damaged reputation, Gainesville would suffer. The healthcare sector and growing tech presence provide some cushion, but the university is still the economic center of gravity. I think this risk is low. UF is a strategic priority for the state, and Florida's population growth ensures strong demand for public higher education. But low risk isn't zero risk. Insurance costs are a problem across all of Florida, and Gainesville isn't immune. My insurance premiums have increased 37% in 18 months. This directly eats into cash flow. If insurance costs continue rising at this rate, rental math that works today might not work in 5 years. Gainesville is inland and less exposed to hurricane damage than coastal cities, which helps with insurance. But the Florida insurance market is dysfunctional in ways that affect everyone. Interest rates have changed the math significantly. My first property had a mortgage rate of 5.875%. Properties I'd look at today would carry rates closer to 7%. That difference matters enormously for cash flow. Investors who bought in 2020 and 2021 with sub 4% rates have a permanent advantage. The rest of us have to work harder to find properties that make sense at current rates. The market is getting more competitive. When Roberto started investing in Gainesville 6 years ago, he often had no competition on properties. He could negotiate aggressively and close below asking price. Today, good properties attract multiple offers. Prices are rising 8 to 12% annually. Days on market are shrinking. The secret is getting out. I still think there's opportunity, but the window is narrowing. The easy phase of this market's growth is probably over. What remains requires more skill, more selectivity, and more patience. Let me put Gainesville in context by comparing it to where many investors are actually putting their money. In Miami, a $200,000 down payment gets you an $800,000 condo that loses money every month and requires appreciation to justify the investment. In Gainesville, that same $200,000 could buy you 3 rental properties outright or be used as down payments on 4 to 5 properties with conventional financing. Those properties would generate $3,000 to $5,000 in monthly cash flow while also appreciating. In Orlando, median home prices have crossed $400,000, and rental yields have compressed to the point where cash flow is difficult without 30% or more down. In Gainesville, median prices are half that, and rental yields still support positive cash flow with 20 to 25% down. In Tampa, the same story as Orlando. Prices have run up faster than rents, compressing yields and making cash flow difficult for new investors. Gainesville remains one of the few Florida markets where the fundamental math still works for building wealth through rental real estate. Let me be clear about who this market is not for, because every investment has a target profile. If you need liquidity, Gainesville is wrong for you. This is not a market where you can sell a property in 2 weeks if you need cash. Marketing times are longer than major metros, and the buyer pool is smaller. If you want hands-off passive income with no involvement, Gainesville requires more engagement than you might expect. Even with good property management, you need to stay informed about your properties and the market. This isn't a buy and forget situation. If you're looking for quick appreciation flips, Gainesville's growth is more steady than explosive. Properties appreciate 8 to 12% annually, not 30%. The wealth building is real but gradual. If you need to be within driving distance of your properties and you live far from North Central Florida, the logistics are challenging. I fly to Gainesville quarterly to check on my properties, which adds cost and complexity. If you have less than $50,000 to invest, the entry costs in Gainesville, while lower than Miami or Tampa, still require meaningful capital for down payments, closing costs, and reserves. This market is ideal for investors with moderate capital, long-term horizons, willingness to be engaged but not obsessive, and realistic expectations about building wealth gradually through cash flow and appreciation. Let me get specific about how I'd approach this market if I were starting today with $50,000 to invest. I would not buy yet. I'd spend the first month learning the market. I'd drive to Gainesville for a long weekend. I'd spend time in different neighborhoods at different times of day. I'd eat at local restaurants and talk to people about what it's like to live there. I'd visit properties for sale, even ones I wasn't planning to buy, just to understand condition and pricing. I'd interview at least 5 property management companies. I'd ask each one about their investor clients, typical rents by neighborhood, common problems they see, and what separates properties that perform well from properties that don't. I'd find a local real estate agent who works with investors, not just home buyers. Investor-focused agents understand cap rates, cash flow projections, and market comparisons. Homebuyer agents understand school districts and kitchen finishes. You need the former. After that learning period, I'd look for a property in the $180,000 to $220,000 range. 3 bedrooms, 2 bathrooms, built after 2000 in one of the professional rental neighborhoods I mentioned earlier. With $50,000, I could put down 25% plus closing costs and maintain reasonable reserves. The property would likely generate $100 to $200 monthly positive cash flow from day one. Not exciting, but real and compounding. After 12 months of managing that property and learning from it, I'd evaluate whether to buy a second property using accumulated cash flow plus savings or through a cash-out refinance if the property has appreciated sufficiently. That's the path. Slow, methodical, boring compared to TikTok real estate gurus promising overnight riches. But it's how actual wealth gets built. I want to end with something I believe strongly but can't prove. The opportunity in Gainesville is time limited. Markets don't stay undiscovered forever. When the numbers work this well, sophisticated investors notice, and competition drives prices up and yields down. I'm already seeing the early stages of this process. A national real estate investment trust purchased a 40-unit apartment complex in March. A hedge fund manager I know through investment circles has been quietly accumulating properties. The number of out-of-state license plates at open houses has increased noticeably. When institutional money arrives in force, 2 things happen. Prices jump immediately because institutions can pay more than individual investors, and cash flow disappears because everyone's paying premium prices that only make sense for entities with different return requirements. I think we have 18 to 24 months before this market gets meaningfully more competitive. After that, Gainesville will still be a good place to invest, but it won't be the exceptional opportunity it is today. That's my honest assessment. I could be wrong. Markets are unpredictable. But the trajectory seems clear. I've given you the map. What you do with it is up to you. If Gainesville interests you, start by visiting. Not a quick drive-through, but an actual visit where you spend time in different neighborhoods and talk to local people. Markets feel different in person than they look on paper. If you decide to invest, move deliberately, but don't delay indefinitely. Analysis paralysis kills more real estate dreams than bad deals do. At some point, you have to make a decision with imperfect information. If you decide Gainesville isn't right for you, that's fine too. Not every market fits every investor, but at least let that decision be based on actual analysis rather than assumptions. I'll keep sharing updates on my Gainesville portfolio, what's working, what's not, and what I'm learning along the way. Subscribe if you want to follow that journey. And drop a comment telling me what you think. Am I wrong about this market? Is there something I'm missing? Have you invested in Gainesville and had different experiences? I read every comment and respond to as many as I can. The best insights often come from people with different perspectives. The opportunity is real. The timing is right. The question is whether you'll act on information or just consume it. That Miami condo I almost bought 18 months ago, it's still for sale. The price has dropped by $75,000, and it's been on the market for 8 months. Meanwhile, my 3 Gainesville properties have appreciated by a combined $41,000 and generated over $60,000 in rental income. Same initial capital, different decision, different outcome. That's the power of finding the right market at the right time. Gainesville won't stay hidden forever, but right now, it's still there for investors willing to look beyond the obvious. Thanks for watching.